If you've ever Googled how much do I need to buy a home in Vancouver, you've probably gotten a bunch of conflicting answers, outdated numbers, and stuff that only applies to Toronto. So today I'm going to be cutting through all of that. We're going to talk about the actual numbers down to the dollar for buying in Vancouver area right now in 2026. And I'll tell you this up front, there is no single answer, because whether you're looking at a condo, a townhouse, or a detached home, the number you need can swing from anywhere around $45,000 to all the way to nearly $400,000. And no, that is not a typo. By the end of this video, you'll know exactly where you fall and what you need to do to get there. Let's get into it. So step one is you want to know, what are you actually buying? Before we talk about what you need to bring, we need to anchor it down to real prices. I'm going to be using the benchmark prices from the Real Estate Board of Greater Vancouver, the REBGV, from February 2026. These aren't averages skewed from a few luxury sales. The benchmark represents a typical home in each category. So here's where the market sits right now. Condo or apartment will sit around $708,200, down about 6.8% year over year. This is your entry point, usually a 1 or a 2-bedroom unit in Metro Vancouver. Think Burnaby, New Westminster, Surrey, or parts of the city itself. For a townhouse, $1.046,100,000, down about 5.6% year over year. You get more space, usually a garage, often in a strata community. This is where a lot of young families land when they outgrow that condo. For a detached home, you're going to be sitting around $1.835,900,000, down about 8.8% year over year. Yes, nearly $2 million is the benchmark for a detached home in Metro Vancouver. I know, stay with me here. Here's something most people miss though. Right now is actually a buyer's market. We're sitting at about 8 months of supply with a sales to active listings ratio around 12%. Prices have come down meaningfully from their peak, and if you've been sitting on the sidelines waiting, the window is genuinely more open than it was 2 years ago. Step 2, we're going to talk about the down payment. So this might be the part you actually came for. How much money do you need to put down? In Canada, the minimum down payment isn't a flat percentage. It's tiered based on the purchase price. Here's how it works. The federal down payment rules state 5% on the first $500,000 of the purchase price, and 10% on any amount between $500,000 and $1.5 million, and 20% minimum on anything above $1.5 million. Again, these do include some first-time homebuyer incentives, and a disclaimer, I'm not a licensed mortgage broker or financial advisor. These are federal rules as of April 2026, but mortgage qualification depends on your full financial picture, which includes income, debts, credit, and the property type. Always speak with a licensed mortgage broker before making any decisions. These rules were updated in December 2024 when the federal government raised the insured mortgage cap from $1 million to $1.5 million, and that was a big deal for Vancouver buyers. So I'm going to show you what this means in actual dollars for each property type. Scenario A, a condo at $708,200. 5% of $500,000 equals $25,000, and 10% of $208,200, $20,820. So your minimum down payment would be $45,820. That gets you in the door. Could you put more down? Absolutely. And I'll show you why that sometimes makes sense in a moment. Scenario B, you're looking at a townhouse at $1.046,100,000. 5% of $500,000 again is $25,000, and 10% of $546,100 is $54,610. So your minimum down payment comes to $79,610. I know that's nearly $80,000. Keep watching. There are programs that can help you get there faster than you think. Scenario C is a detached home at $1.835,900,000. Because this one is above $1.5 million, the minimum is 20%. Full stop. 20% of $1.835 million is $367,180. $367,000. That is not a starter home situation. This is a household that has built significant equity, saved aggressively, or possibly help from family, or all three combined, but this is the reality of the detached market here. Now, putting down less than 20% comes with a cost most people don't factor in, and that leads me to step 3, CMHC mortgage insurance. If your mortgage payment is less than 20%, your mortgage is called high ratio, and you are legally required to pay mortgage default insurance. Most people call it CMHC insurance. Here's the part that surprises people. This insurance doesn't protect you, it protects the lender. However, you are the one that pays for it. And disclaimer, CMHC CMHC. Premium rates are set by CMHC and are subject to change. Always verify rates with your mortgage broker. The good news is the premium gets added to your mortgage and it's not paid upfront in cash, but it does increase your total loan amount and your monthly payment. Real example, the $708,200 condo with a minimum down of $45,820, your mortgage is $662,380. The 4% CMHC premium on that amount is $26,495. So your actual mortgage balance becomes $688,875, and that's what you're paying interest on. This is why putting more down, if you can, often makes sense. Going from 5%, 10% drops your premium from 4% to 3.1%, and that's real money saved over the life of the mortgage. Step number 4, we're going to talk about closing costs, the number most people don't talk about. And here's where I see a lot of buyers get blindsided constantly, because your down payment is not the only money you need. You also need cash on hand for closing costs, and this money cannot be rolled into your mortgage. It needs to be liquid and sitting in your account. Budget roughly 2% to 5.5% of the purchase price on the lower end for a resale condo, and on the higher end for a new pre-sale unit because possible GST. Here's what makes up that number. Again, disclaimer, I am not a lawyer, notary, or financial advisor. Closing cost estimates below are approximate and will vary based on your specific transaction. Always confirm exact amounts with your notary or real estate lawyer before your completion date. Property transfer tax, or PTT. This is the biggest one. Province charges 1% on the first $200,000 of the purchase price, 2% on amounts from $200,001 up to $2 million, and 3% on anything above $2 million. So on the $1,046,100 townhouse, that's approximately $18,922 in PTT. On the $1.835 million $900 detached, approximately $34,718. There is some first-time buyer property transfer tax relief. This is important, and if you are a first-time home buyer, here's how the exemption actually works. The first $500,000 of your purchase price is exempt from PTT. You only pay PTT on the amount above that. So on a $708,200 condo, as a first-time home buyer, you only pay PTT on $208,200, which works out to roughly $2,200. That is a significant saving compared to the $12,000 a non-first-time buyer would pay on the same property. This exemption is available for purchases up to $835,000, and there is a partial exemption between $835,000 and $860,000. Above $860,000, first-time buyers pay the full PTT like everyone else. Disclaimer, PTT exemption rules include eligibility requirements, Canadian citizenship or PR status, never having owned a principal residence, BC residency history, and you must move in within 92 days and live there for at least 1 year. Your notary will confirm your eligibility. Again, this is not legal or tax advice. Moving on to other closing costs you're going to need to budget for are legal and notary fees, which are about $1,500 to $2,500. A home inspection, generally between $500 and $800. An appraisal, sometimes required by your lender, is around $300 to $500. Title insurance is going to be between $200 and $400. First year of home insurance, often paid up front, will be around $1,500. Moving costs around $1,000 to $3,000, and property tax and strata fee adjustments on completion day. They will vary for new construction and pre-sale. Extra costs buying a brand new home or a pre-sale unit can include 5% for GST, which will be 5% of the purchase price. There is now a rebate for GST on brand new builds. Disclaimer, but again, GST rules for new construction are complex. I'm not a lawyer or a tax professional. Please work with a qualified real estate lawyer for pre-sale transactions. Next, for step 5, we're going to talk about what income do you actually need. Down payment and closing costs are the cash you need up front, but the bank also needs to know you can handle the monthly payments every single month. That is where the mortgage stress test comes in. The stress test, to qualify for a mortgage in Canada right now, you have to prove you can afford payments at either your actual contract rate plus 2% or 5.25%, whichever number is higher. With interest rates currently in the roughly 4% range, most buyers are being stress tested at roughly 6 to 7%. Lenders want to know you can handle the payments even if the rates go up. Disclaimer, interest rates change frequently. The rates referenced here reflect conditions as of April 2026. Always get a current rate hold from a licensed mortgage broker. I'm not a mortgage professional. These numbers are for general illustration only. Lenders also look at your gross debt service ratio and and your total monthly housing costs ideally shouldn't exceed about 39% of your gross monthly income. So let's talk about some rough household income benchmarks. Note, these are rough estimates assuming a minimum down payment, a 30-year amortization, and a 4.5% interest rate. Your real number depends on your debts, your credit score, your income type, down payment amount, and the lender you work with. Work with a mortgage broker for your actual figure. So for a condo at $708,200, roughly $130,000 to $140,000 of household income per year. For a townhouse at $1.046 million, roughly $185,000 to $200,000, and a detached at $1.835 million, roughly $260,000 to $290,000 in household income per year. These are household numbers, combined income if you're buying with a partner, and yes, the 30-year amortization, now available to all first-time home buyers and buyers of new builds, does make a meaningful difference to your monthly payment and what you can qualify for. For step 6, we're going to talk about the first-time home buyer programs. These are programs that can actually help you get to that number you need to get started. The numbers are big, but there are real legitimate programs that can help you build that down payment faster or reduce what you owe at purchase. Let me walk you through the main ones. Again, another disclaimer: program rules, limits, and eligibility can change. The information below is current as of April 2026 based on publicly available federal and provincial guidelines. Confirm current details with a licensed financial advisor, mortgage broker, or the CRA website before making any decisions. Number 1, we're going to talk about First Home Savings Account, FHSA. This is the most powerful tool available to first-time home buyers right now. You can contribute up to $8,000 per year, up to a lifetime maximum of $40,000. Your contributions are tax deductible, similar to an RRSP, and when you use the money to buy a home, withdrawals are completely tax-free. As a couple, that's $80,000 between you with zero tax on the way out. If you haven't opened one yet, do it today. The sooner you open it, the sooner your contribution room starts building. Number 2, we're going to talk about the RRSP Home Buyers Plan. You can withdraw up to $60,000 from your RRSP tax-free to put toward your first home. As a couple, that's $120,000. You do need to repay it over 15 years, but there's no interest on the repayment. Stack this with your FHSA and you've got a powerful combination. Number 3, we're going to talk about BC property transfer tax exemption. As we covered earlier, as a first-time buyer on a home under $835,000, you only pay PTT on the amount above $500,000. So on a $708,200 condo, that's roughly $2,200 instead of paying over $12,000. It's real money that stays in your pocket. Number 4, we're going to talk about the GST new home rebate. If you're buying a new build, you'll pay 5% GST, but there's a federal rebate for homes under 1.5 million. So your lawyer will handle this at completion. Just make sure you're working with someone who knows new construction transactions, because we've seen some costly mistakes. Contributing to the FHSA and the RRSP Home Buyers Plan is the most powerful first-time home buyer stack available right now. A couple who has maximized both can put together $200,000 in down payment funds before touching any other savings. So for step number 7, we're going to talk about what you actually need on day 1. So let me put the whole picture together. These are conservative estimates, minimum down payment, and typical closing costs. So for a condo at $708,200, the first-time homebuyer minimum down payment would be $45,820. The PTT, only on the amount above $500K, would be $2,200. Legal fees, inspection, insurance, and moving costs, roughly $6,500. The total cash you would need to be going in would be approximately $54,000 to $58,000. For a townhouse at $1.046 million, the minimum down payment would be $79,610. Property transfer tax, there's no exemption at this price, will be $18,922. Legal fees, inspection, insurance, moving, roughly $7,000. So the total cash you would need going in would be approximately $105,000 to $110,000. A detached at $1.835 million and $900. A minimum down payment would be 20%, which would be $367,180. The PTT would be $34,718. The legal fees, the inspection, the insurance, and the moving will be roughly $8,000. So the total cash you'll need going in would be approximately $410,000 to $415,000. Another disclaimer: all figures above are estimates for illustrative purposes only. Actual costs will vary based on your specific property, strata fees, adjustments on completion day, lender requirements, and tons of other factors. I'm not a lawyer, I'm not a notary, I'm not a mortgage broker. Always get a full cost breakdown from your notary and mortgage professional before you make any commitments. So there it is, the honest, unfiltered breakdown of what buying in Vancouver actually costs in 2026, whether you're staring at that condo entry point around $55,000 out of pocket, or you're growing a family and working toward a $100,000 day one number. Now you know exactly what you're working toward, and knowing the number is just the first real step. So here's what I want you to do next. If you want me to look at your specific situation, your income, your savings, your timeline, and map out a real path to buying in this market, you can book a free call with me. No pitch, no pressure. We just put your numbers on the table and figure out exactly where you stand. The link to book is right in the description below. It takes about 30 seconds. I'd love to help. If this video helped you, please drop a like. It helps more people in Vancouver find this information, and I'll see you in the next one.